India assurance. But bond markets and bank nifty investors have their eyes fixed on the RBI today as the central banks had promised to review on the September 8th its decision to impose the ICRR or the incremental CRR of 10% on deposits garnered by banks between May 19th and July 28th. Now, removing of the incremental CRR will be a big relief as it is a cost to banks. But will the RBI remove the ICRR? Latha is here with a quick CNBC-TV18 poll. Latha, over to you.
Well, the RBI decision can go any which way, and so the only way to answer that was a poll that we did yesterday, and that indicated that half the market, 50% of the people we polled, are expecting the incremental CRR to continue at, instead of 10% at probably 5% or thereabouts. About 20% are expecting it to be fully removed and replaced with other instruments, and about 30% are expecting it to be retained as is. Now, just to explain this 10% CRR, what it means is that Reserve Bank worried inflation is high and the 2,000 rupee notes were bringing in liquidity. And therefore, from May 19th, when the 2,000 rupee notes came in, up to July 28, when the bulk came in, that whatever deposits people gathered, they have to keep 10% of that as idle. Deposits are raised at 5-6%, but they have to be kept idle. They can't be lent. So it's obviously negative for banks. Now, what we notice is the promise also came that on September 8th, they will review it. September 8th or before actually was the promise. And hence a lot of expectation today that whether it would be cancelled altogether. Now, today, yesterday, we don't have today's liquidity position. Yesterday, the liquidity position was a good 80,000 crores of surplus liquidity. So there are arguments that it should continue and inflation continues to remain high. But there are others who believe that on September 15th, the advance taxes will push the liquidity into a deficit because money is taken away from banks and kept with the government. That could be a good deficit of, about 2 lakh crore. And therefore, remove it now and, manage with steps like VRRR, variable rate reverse repo, which allows the RBI to pull out liquidity, and variable rate repo, which allows them to give liquidity to the market. Now, actually, I'm not even prepared to read everything I've written because I have one eye only on the website. It could come morning is what we are told, which means it can come before 9, it can come at 10, it can come at 11, it can come at after market hours also. But there is definitely a decision that's expected. Just a point, yesterday 2 things happened which is giving us the view that the ICRR will be taken off. One of is that the Reserve Bank announced a variable rate reverse repo of 50,000 crore. Now, if they are doing that, then don't they want the ICRR? There are others who say that in the past they have done 1 lakh crore. They've done only 50,000 crores. So are they retaining the ICRR? And then there was also a very big rupee intervention. The rupee didn't depreciate as much as other currencies in spite of the dollar going over 105. It did depreciate, but not as much. And therefore, the expectation is that the Reserve Bank sold dollars. And when you sell dollars, you're pulling back rupees because banks pay for it in rupees. Therefore, RBI has other tools to remove liquidity. The market is all over the place. Let's hope the decision comes before a bond market starts, before, actually stock market starts, because it's a very big positive for HDFC Bank. Could explain why the stock rose over the last 2 days.
Oh, absolutely. There was big performance there from stocks like HDFC Bank. Thanks a lot, Latha, for that. So the RBI will be reviewing the incremental CRR rate. Let's see how that plays out.